Good morning. Welcome everyone to Admiral Markets. This is the trading room, our live trading room here at Admiral Markets. My name is Chris, and we're going to take a look at the Forex market, the charts together. Before we do that, though, before we look at the euro dollar and pound dollar and all of them, we should, of course, explain this disclaimer and the rest disclaimer. The online educational material is meant for a global audience. It is developed by Admiral Markets Estonia. All right, so please take into consideration that the information in this session may not be suitable for everyone, and to get the corresponding information, take a look at admiralmarketsglobal.com. Good. Then, of course, the risk disclaimer explaining that trading for exchange is considered high risk, just like global financial markets, all of them, and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. All right, so please consider that and be aware of the risks involved, and you should be aware of what those risks are yourself. All right? Good. So our quick go-to trading plan before we hit the charts, right, so that we have an idea what we're looking for. You can always define the market with these 5 steps. If you want a easy way to remember, just remember the T of trend, the O of opportunity, the F of filter, the T of trigger, and the E of entry, right? TOFT, for instance, okay? We're always looking for trend, or not necessarily with the trend, but you have to define the trend, or at least I would recommend that, right? Even if you're a reversal trader, you have to have a trend in place to be able to trade a reversal. Then we're looking for an opportunity that could be support or resistance, divergence. Then we check filters to check if anything could be blocking that trade. For instance, if you're trading a reversal trade, but there's a major support level around the corner, right in front of you, then it doesn't make sense to take a reversal trade, right? Those are filters. Then establish a trigger. You might have a great pin bar, but you don't trade it on the pin bar itself. You might, for instance, use a fib on the pin bar and enter at the 50% retracement, which would be the entry method. So using this model, you can dissect the currency market, and you can also judge whether the market is matching your trading plan. It's a very fast trading plan, but I do think that all of these elements should be in a trading plan in general. If you don't have it, you might want to seriously think about adding it or wonder why you don't have it and what is the reason for that. All right, so these 5 things are crucial for a trading plan. And you all have to, of course, choose and define all 5 of those yourself. In this trading room, though, we'll be specifically focusing on these tools to answer those questions. And you know, if you've been here longer, that I'm mostly a with the trend trader. Alrighty, so before we start, though, we're going to take a look at the Admiral Markets website. Let's take a look at the Forex calendar together and see. We should have ADP today, and we have Euro Spanish PMI. First of all, we have Pound Services PMI. Not only Spanish, we have Italian, French, German as well, and Euro in general, apparently. So those are all coming in the morning. Then we have USD, ADP, and ISM non-manufacturing PMI. So pretty interesting news, pretty important news today. But later this week, we actually have bigger news. We have Euro and Pound interest rates tomorrow. And we have NFP on Friday, okay? I don't have to show you that, I'll just tell you. Regarding the webinars, today is going to be a trend line focus. As you can see here. Oh, it's already taken away. Yeah, that's a bit too early. The webinar just started, but that's a bit odd. In any case, tomorrow we have oscillator trading, all right, and we have a focus on Murray math together with Tarantula. Good. Let me just send a quick link to the organizer that the link for today's session is gone. Alrighty. Good. Let's move on to the charts, okay? Let's take a look at the euro dollar. And let's put a different template on, something like this. So the euro dollar actually has a great consolidation. It's been acting in this range for quite a while. We already talked about it yesterday, that it has the potential to move up here and then down, right? The up should have been corrective for more downside. That's what we said yesterday. More or less that has happened indeed. We've just had a consolidation, kind of a bear flag at best, or some kind of triangle if we connect the bottoms and tops. If we put trend lines, of course trend patterns are great for trend lines because obviously trend lines work well on chart patterns, right? Something like this, a wedge, a descending, or no, not a descending, a contracting wedge, of course, a triangle is great for trend lines. Trend lines work very well with these chart patterns. They encapture price action very neatly. Right? We can understand what's going on with the market just by putting these two trend lines on very easily. We can also see that the moving averages are totally flat. So that's one more basically confirmation that basically the range is going on. Because if the moving averages are flat, there is usually a range. Why is that? Let me show you on a charting here. Let me draw this. Because if you have something like this going on with the moving averages, my drawing tool is not working properly. 1 second, folks. Let me try that again. No, it's not. I'm not able to. I can draw, but it's just, it's right away drawing. I need it to pause. So in any case, you can see that the moving averages are flat, and price is, going outside of it here, right? And also, oh, now it's working. And now also here, right? Which means that basically whenever it goes to one extreme of the moving averages, it goes back to the moving averages, right? It goes away, it goes back, goes away, goes back, goes away, goes back. So every time it kind of like tries to escape the moving averages, it tries to move away from the moving averages. Because the moving averages don't have any angle, it's kind of has no speed to pull away. Okay, that of course will not last forever. At one point, price will be able to escape and drag the moving averages into an angle. Most likely that will be to the downside. And why is that? Because we have this tremendous impulse here. That is a big move. That is called the impulse. Why? Because there's a fast directional movement in one direction. Why is this a range or consolidation? Because price is chopping up and down and retracing all of its candles basically continuously. And we have this chart pattern. And usually if you have an impulse that strong with no divergence and you have a chart pattern this weak, you get the continuation to the downside. All right. So we talked about that yesterday, and it did happen. Yesterday was the 4th. So yesterday's price action basically just oscillating up and down. Those are one of those days where really nothing happened on the euro dollar. Just all that green that you see on the chart, that's basically it. That's all what happened. So if you're a scalper, you could probably have taken some pips up and down, I'm sure. If you're a intraday trader, it's already more difficult. If you're an intra-week trader, this is definitely not interesting for you, right? Because it's just chop. And you're waiting for this chop to finish, and you're trying to get a swing trade here or intra-week / intraday trade to the downside. Alrighty, so what would be the target when we break this particular orange line, the bottom of that triangle? Then we can put a fib on. We take the top here to the bottom, and we see that the currency only stopped at the 23.6. So there is still the opportunity for the currency to go higher to a higher fib, like the 38.2, max the 50 fib. If it doesn't respect the 50 and doesn't turn at the 50 for more downside, well then my analysis here, whatever, well, not the analysis is not necessarily wrong, but the structure of the market is changing, and therefore things are looking more bullish. Excuse me. So that would also break these moving averages, the green band, right? So that would be another confirmation. Anything below the 50 fib though, anything below 135.78 is still bearish, even if it were to spike out of this consolidation, because that sometimes happens. You see a triangle like that with an impulse, and sometimes you actually get a spike out the opposite direction. You hit a bigger resistance, like the moving averages, the green band, and the 38.2, and this flies down. Sometimes happens. All right. The other option, of course, is that you don't get the spike up, you get the breakdown, and we move to the minus 272, which is the target at 134.26. The bigger target we can find on the 4-hour chart by putting a fib from the very top to this very bottom. And let me change the color of that fib. And that minus 272 is at 134. All right, so that's the bigger target, basically. So back to the hourly. Or we can keep on the 4-hour. So we're looking for either, I'm looking for a short from this area to here, or upon the break to here. As long as it stays in those orange lines, it's a triangle, and I wouldn't be interested. All right, so let's see. I got a question what the moving averages are. And I'll just type that instead of, it's easier for you if you see it. So there are more trend lines that we can put on the euro dollar, by the way, as I write these moving averages. Some of them are very important, in fact. Okay, there it is, Robert. Okay, then you should be able to see the numbers in the chat. One of those very important lines, trend lines, is this one on the weekly chart connecting these two tops. You can see the price stops right here. Well, it's blocked by all these fibs, but let me take those fibs off otherwise. But if you put a trend line on these two, you can see price nicely and neatly stopped right at that trend line. That could be a big weekly bounce. All right. Other trend lines that we have to be aware of are, for instance, this one, but that's still far away. We can put trend line like this. That's closer by. What else? We can put trend lines like this. Right? These are all resistance lines and support lines that could influence and impact our trading. Right? Even one like this, but this is still far away. Like that. All right? Cool. So one second, folks. Alrighty. So this is the daily chart. You can see that not only was there a weekly trend line, right, that's coming in here. I'll make it a bit different color. Let's make that red. Alrighty. This red line is not really that visible. Let me make that maybe this, no. I'll just make it black. This black line, the weekly or monthly trend line I showed you, that was a big resistance. But also, of course, this rising wedge basically pattern, that was a particular chart pattern with these trend lines that could have been in play. You never know. It seems that it could be. It seems like we are respecting that line as well. So there was a confluence of that resistance right there. Not only that, but there was, of course, also a fib potential there. If you put a fib on this very down move from top to bottom, we stopped at the 61.8 fib, roughly speaking. Okay, so that was also a resistance spot. Let me get rid of these fibs because otherwise the chart would be too crowded too much. So back to the daily. A lot of reasons why this could be stopping right here, and it did. Now, there are two potentials. Either we break out of those trend lines and we move up to 143, or we start to break to the downside and maybe make a bigger retrace. Right? The next bigger support is at 133 here. That would be a potential bouncing spot, so price could fall to there. We're also back at the green band, which itself could be a support level. So maybe the trend line is a bit like this, and maybe we're just right at the bottom of that trend channel together with the moving averages. A break of that moving trend line could see a fall to the green one, basically, and a bounce here might mean a move back up to test these resistances. So from this perspective, from this daily and weekly perspective, if we then zoom back to the hourly, we can see that there could be a reason besides a bearish formation. It could also be just a pattern for a potential bounce, right? It could be maybe a bounce off this trend line for more upside. But because of the downside pressure, it's something that I wouldn't trade, and I would really only be interested in trading upside if we break the 50 fib here. If we break that 50 fib, then this is indeed probably a bounce off of the trend line for more upside. For the moment though, because of this downside pressure, there's a good chance we might break this triangle and the daily trend line to move down to test that weekly / daily bottom that we talked about here. Right? So if you look at it from this perspective, there's a wide open zone to the downside here, like this. And above the 50 fib, there's a potential to move up like this with some resistance about halfway, which still could be of importance. If we break above those trend lines, we'll see more upside. If we break below green, we could see more downside. So this is how you can space out potential areas that, where price could go into and move quickly and move faster than maybe usual. Of course, there will be always consolidations within a certain zone. Nothing will go in a straight line forever. But these zones are roughly what I'm looking for to trade on the euro dollar, right, to the up and downside. So you can use trend lines, fibs, moving averages to distinguish what and where and when you want to trade which side. And in many cases, it's just good to be neutral and say, okay, I have two lines, two areas in mind. If it breaks one of the two, then I'm getting my confirmation, and that's the trigger I'm looking for. That's step 4, the trigger, right? At the moment, the opportunities, basically this is step 2, the opportunity is here and here, right? The trigger itself would be the break of the trend line or the 50 fib. So I guess that's all I have to share with regard to the euro dollar. Let's see if we do get the push down. We can put back this trend line, this smaller trend line. Already, something like that, right? We had on that chart. So we can keep an eye on this. If we do break this top line, then there could be some counter trend trade up to the 38.2, but that's a risky one in my opinion. These spikes out of the consolidation with a trend like this, an impulse like this, those are always very, very tricky. So how about that cable? Let's take a look. Cable pushed a bit lower yesterday, but not much, and then got the bounce up and has been sleeping ever since. That's basically the story of yesterday. And sometimes you have to realize that the Forex market can be in a way boring, right? In the sense that nothing happened yesterday. And if you're expecting a lot of action, if you're expecting a lot of fireworks, if you're expecting big moves, sometimes they just don't happen. And it's patience. It needs a lot of patience sometimes to remain out of the market, or depending on your trading plan. If you're a scalper, I guess you always have opportunity. But if you're an intra-week trader here, or even an intraday, it can be difficult to find opportunity with such a choppy move, right? In the very early morning, there was a small drop, about 25 pips, and then a rise. But the rise, if you don't trade reversals, you're not even looking to trade this, right? It wouldn't be of your interest. But once again, though, we were talking about moving averages yesterday. Look how the black band, where that was the target of the very first correction, and then the second target of the correction was the green band, right? It's beautiful how those moving averages sometimes work. And you can use them nicely for, back to the pound. You can use them nicely for those reversal trades as well, right? Targeting the black and green bands, if you like reversals. In the meantime, though, we're getting a break of this trend line. Also, a type of triangle, a bit funky looking triangle, but still, we got the break earlier this morning. So I'm not sure if anyone caught that break or took that break. We do have a pound news later today, so that could cool down the down move. But this is a clear trendline break, triangle break, and doing pretty good now. If you took that break, would have been up 22, not bad. So what would be the target if you are in that trade? Well, the conservative target would be a fib maybe from, let me take a look. Probably from here. Or maybe from here actually. Yeah, from here. Doesn't matter. This one or this one, it depends. If you take this one, it's the 50 fib. Let's take the more conservative one, because if we take the lower one, the target will be closer, and we'll be more sure that the target will be hit. So the minus 272 target is at 162.10. That's a big fall. It's about 90 pips left. I don't know if that fall will happen today. It could. With big news events, they could accelerate price faster. That fall could bring, of course, that news event could see this or push this currency to the minus 272 target at 162.10 and could stimulate it to fall more. So that's basically a bit similar as the euro dollar, but the pound dollar chart pattern is already breaking. What does that mean from the bigger perspective? Let's take a look at the 4-hour chart. First of all, though, let me get rid of this fib. Alrighty. Well, the 4-hour chart definitely showing a potential for a reversal. A lot of speed, a lot of impulse to the downside. Moreover, I think we talked about it yesterday, but there's a very important resistance horizontal level right here at 167.30. Price is struggling to break it. I'm sure about it. We talked about it yesterday, so I don't want to dive into that too long, but if you look at that resistance level, clear resistance level, plus, one second, can we adjust that line a bit? Plus we had weekly wicks here, indicating that we just didn't have any power left to the upside, right? So now we're getting the fall. So maybe this uptrend is over and the pound dollar will be back in a downtrend. That's possible. With a resistance like that, so big on the weekly chart, with wicks and momentum loss pretty decent as well, after a sustainable trend, no, I shouldn't say that, after a big trend up, all right? Don't forget that this has moved up about 2,000 pips, so maybe it's time for a correction. Also, if you put a fib on this very first up move, we hit the minus 272 target to the pip, to the T. That was taken out as well. That itself could be a turning spot. So if we then zoom into the daily chart and we start to see very impulsive moves and we see a break of this black band, well then, definitely there's the potential for the pound dollar to move to the green band and maybe lower. So down to the 4-hour chart, and we can see this is already a pretty trending move down. We have a big oscillator reading. So in my opinion, one more down move here, and then up, and then down again seems likely. All right. So why is that? Because we're going to break this bottom. It's probably very likely because of this big impulse. When we break this bottom, we'll probably see divergence on the 1 hour chart. That divergence will make price make a retracement, but we still don't have divergence on the 4 hour chart, which means we'll see one more fall after that to get divergence on the 4 hour chart, and then we'll see another correction. So something like this is what I'm expecting, looking at the 4 hour and all the other aspects. Down, corrective up, down, corrective up, probably down again, but that's, that's so far away that doesn't make sense to even look at that. I mean, it's pretty far away. Alrighty, I just have a sip of coffee. I made a coffee for myself. So sorry for those drinking sounds there, but usually I don't take coffee, but took an extra one today. So that is the pound dollar, right? So what does that mean? That means that this break is looking pretty good to me. And well, if you're not in that trade, I guess waiting for the pound news to take its effect would make sense. When is that going to happen? Let's take a look. Now we're in 16 minutes from now, so it's still far, but I don't think it's, an intraday trade makes sense. I think probably a bigger stop loss would make sense. Personally, I'd rather wait for the news. But sometimes the news could spiral it forward and then the opportunity is gone, right? That could happen. That could happen. So it depends. If you like this trade, then, if you put a stop loss above the 163.66 here, then you should be relatively safe, even if you get a new spike up. Why? Because that's the 61.8 fib and this top here. So price will probably not break those levels. It respected the 50 fib, so it probably will not break the 50 fib. It would not break the 61.8, sorry. I think I said 50. All right, so it stopped here 50, will not break the 61.8 and the stop. So I think a stop loss above, as I said, above that level would be safe with a target of 162.10. I think that, or 162.20, let's say. I think that isn't a bad idea. It's about, the R2R is about 1.8 to 1. So that would be an option. How about this Aussie? Aussie USD. Any good trend lines here? Well, we talked about the fact that this impulse was so strong that if you get anything of a corrective downside, we could see one more breakups. Remember? That's exactly what happened. All right, so if you're trading reversals, I told people watch out with trading reversals because this is a very strong impulse, and if you see a closing reverse and then a bear flag, that's fine. Then you can trade it safely to the downside. But if you don't get that and you get a slow downside, then that's just a bull flag, and after this impulse, it begs for one more upside. Remember? So look at that. That's exactly what happened. And the reason why I'm telling you this is just to give you an idea how these concepts can work, right? It's not no other reason, not to say like how great yesterday's analysis was. I don't really care. I just want to show you how you yourself can use it. I basically want to give you the confidence in these methods by hooking back to what we've said. So we made that upside, and then I said also that watch out, if as soon as we break this bull flag, we're going to stop as well, and that will probably be a resistance spot. Because why? Because we'll have divergence on the 50-minute chart, and then we'll probably, as you know, what is the goal when you have divergence on the 50-minute chart? The green band. That's exactly what it did. Move down to the green band, right? So this entire scenario of down, correctively up, and then down again occurred. So what's going to happen now? Let's talk about now. For me, this upside is definitely still a potential resistance, right? Just like here, we shot above the green band on the 4-hour chart. Here too. Same thing, right? So this could be a resistance. And this could be a retracement for more downside. Let's put a fib on this very last downside. And the price just exceeded the 61.8. I was expecting a bounce at the 61.8, but that didn't happen. Just went a bit above that. That can happen. This seems to be a correction in my opinion. The question is, has the correction ended here, or will the correction go higher to the 78.6? You see my point? We don't know if this correction is over, or will it go higher to the 78.6, to the 880.6, to the very top, and then turn, right? A turn is still very likely in my opinion. Why? Because if you look at the daily chart, what do you see? Downtrend, correction, downtrend. For me, there's no reason at the moment as yet to expect a correction unless we break this 90-90 and probably even this 92. Then maybe, then of course things change. And upside would be a very logical continuation there. Till that moment, all this up could just be a correction for more down, and that down could go all the way to, for instance, 84, which is the minus 618 target. At 83.50, there are bigger targets as well, such as, let me put it on this fib, from this bottom top to this bottom. Where did price stop? At the 50 fib. And we broke this bottom. What is the target? At 83.70. Where's the minus 618 target? At 84. Is that pretty close? Yes, it is. Is that trading? Is that confluence? Yes, it is. Right. It's confluence between two targets there. All right. So that's something that is definitely in play on this Aussie, but we have to investigate. So back to the 4-hour and 1-hour chart. We have to investigate whether, as yesterday, this small triangle isn't just a consolidation for more upside like happened yesterday. Will we have the same today? We don't know. We could have the potential to move up to the 78.6 and then fall, or we fall right away. Now, to me, there's one critical thing on this 1-hour chart that makes me a bit leery still of this downside. Even though I have all that long-term expectations of downside, I don't think the short-term charts are ready for downside as yet. Does anyone know why? Any ideas? What would be the reason for upside continuation potentially on the lower time frames despite the resistance on the higher time frames and the potential for the downtrend to continue on the higher time frames? But the lower time frames, something else is going on, and there's a pretty good reason why this hourly could still make that one more move up to a higher fib, which is the 78.6 at the 90. And the 90, of course, is also a big psychological round number as well. Well, I don't see any answers so far. The reason is that there's no divergence between the tops. We don't necessarily need divergence between those tops, but it could be a reason for price to continue. And when price does continue, then we will get the divergence, and then a down move from the 78.6 becomes statistically even more likely. Because we don't have divergence, we are exposed for one more upside. So this is depends really how you look at it. I mean, with the trend trader could see that a breakout to the upside is a with the trend trade. A reversal trader might try to take a reversal in this area for more downside. It really depends how you look at it. So for me to judge whether one of those two are going to occur or not, personally, you would we would need at least, at minimum, probably a break below this bottom here and the green band. And for the upside, we're probably going to need, at minimum, a break above this trend line here. Something like this. We'll probably see one more spike up, pause, and then break. Let me use a different template. 1 second. Yeah, we will probably, the thing is that moving averages are flat here. So if we do move up, we'll probably see an upside and a retracement. The next break of that fractal would be the one that's good, not this one. All right, so that's why I said the next trend line break. All right, so that's my point of view in the Aussie. The Aussie downside, as I said, would really need at least this break. Let me take a look at the hourly. Then we'll probably have a pretty decent chance that this can move down, right? If we break these bottoms here on the hourly chart, we might have a good chance to go back in that downtrend. So that's what I would be looking for. Alrighty, folks. Do you have any preference for a particular currency pair? Don't see any preferences. Well, maybe in the meantime I can continue with the dollar yen. So let's see. What do we got here? 4-hour chart, or daily chart we should start with. In the meantime, though, once again, if you have a particular currency pair, let me know, okay? I think maybe the euro yen is interesting. We'll go after the euro yen maybe, if you agree. This dollar yen, in any case, though, we had a fib here that we can put on, and we can put these trend lines like this, right? What is the dollar yen saying? Basically, we had a massive uptrend. I moved down to the 38.2 fib and a triangle like this, and we broke out of that triangle and now hooking back to potential fib. So that's the perspective from the daily chart. All right. Now, are we going to get a bounce at the 50 fib? That's the question. But if you look at the short-term time frames, we do have divergence here between the bottoms. But if you look at the hourly, there's still a potential to fall one more time before we move up, right? But if you look at the 4-hourly, we are getting into a zone that is making, downside less desirable, right? We clearly have divergence, okay? So when we have divergence like that, what is the target? The green band. So at minimum, on the 4-hour perspective, we could see price on the dollar yen eventually go up to 103. But we know from the daily chart, if we put back that fib, that there's also potential to move up from this 50 fib or the 61.8 fib, right? In that case, if we do bounce up and do make a big upside here, there could be a huge upside all the way to 107.80 and 110. That could be a big, 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 big trend on the dollar yen to the upside, okay? So that's why in combination with the weekly uptrend, in combination with this daily 50 fib, in combination with the 4-hour divergence, despite the 4-hour downtrend, there could be a potential reversal going on here eventually for the upside and for weekly/monthly uptrend continuation. Does that make sense? But despite that divergence, and despite the weekly uptrend, despite the monthly uptrend, despite the 50 fib, if you look at the 1 hourly, there is that potential for it to fall one more time and get one more divergence on the 4-hour chart, 1 hour chart, excuse me. There's a lot of pressure to the downside here, right? And it could be that it's not over yet. And one more break of the bottom before it moves up is possible, looking from this hourly. All right. Down to the 15, we can see that this was a correction, and we are now making that fall. So I personally would not be touching the dollar-yen itself because I'd rather wait for the bounce up, and this last push down is a bit risky in my opinion. The euro-yen, though, looks a bit better to me. In a way, it's the similar pattern, right? The similar upside, but there's a difference between the dollar-yen, and it's the euro-dollar, right? And if we look at the euro-dollar, what are we expecting with the euro-dollar? We had a downside and are now in a triangle, and we're expecting more downside continuation, potentially. That seems the most likely. That's why I like that euro-yen more than the dollar-yen. All right, so same consolidation, but this break could be better. So let's take a look at the 4-hour, and let's start with the daily chart. All right. Now, this particular fib, let's take a look at it. Let's put it from top to bottom as well. We're at the 61.8, so that too could be a bouncing spot. Then again, the 50 fib didn't get respected, so maybe we could just fall down to the 786. That's possible. That would be the target, the bigger target. From this 4-hour perspective, we can see that this is definitely a downtrend, and we're nicely moving below the moving averages, right? We have the green band here, and below it is the black band, and prices below both of them. Definitely a downtrend, no doubt about it. If you have any doubt, just put these moving averages on your 4-hour chart, and you know a lot of information. It's very, very valuable, right? Very easy to define the trend. Alrighty. So with that said, let's take a look at the hourly. This is surely in a downtrend, and there's no divergence between the bottoms, contrary to the dollar-yen. So a lot more sustainability. If we then look at the hourly, what do we see here? Definitely downtrend, and we see some kind of pullback here and a continuation below the moving averages. To me, that looks like a potential opportunity for downside continuation. If we want to use a conservative fib, we could probably use, well, this would be the bigger fib, right? Then we had a 23.6 bounce. The target of that would be at 134.88. If we want to use a bit more conservative fib target, we could use something like, let's see, maybe this. Then it would be 135.70, and 135 would be the targets, right? So that depends. But this downside could definitely continue with this big impulse we have. This is the 15. You can see this upside was just a correction, broke that bear flag, and any hook back here to me could seem like a decent potential to short with a stop loss maybe just above here, and with a target way down at 135, for instance. All right, so that's the equation here on the dollar-yen, euro-dollar, euro-yen. Got to mix up, euro-yen. All right, so very nice downtrend. It wasn't a very good uptrend. Now definitely get a big, big, big momentum down. Some of you might be wondering, hey, this is at the green band right here. Isn't that a potential bouncing spot? You have a good point. It could be, because look at this. Total upside. It never reached the green band actually since October 2012. So, you know, that's actually quite unique. as you can see. I mean, it hasn't been there in 1.5 years. So that is something we definitely want to be careful of. It's not to say that I would necessarily skip shorting on a 50-minute chart, but what we might want to consider, or I would be at least careful of, to be very precise, is that if it makes this downside, then I'm going to be very careful with taking the profit, because that could be a bouncing spot, right? Some push through the green band is always possible, but that could be a bouncing spot. If you look at it from the daily perspective, this area could be a bouncing spot from this time frame, right? And that's also the risk of taking a short in here because of that bigger 61.8 and the daily green band. And shorting it upon the break of this 50 fib, right, down to the 618, that was a better trade, right? But maybe here it looks like we're actually breaking the 61.8, or we broke it a bit here. So there is the potential to break and go as well, just like we had here. So still no preferences. Let's take a look maybe at something else. Let's see, maybe the euro odd, why not? Alrighty. We had a trend channel like this, but we actually accelerated out of it. Pretty interesting. We could even put something probably like this on the chart. Well, anyhow, doesn't really matter. Let me take it off. In any case, without any doubt, this is a downtrend on the hourly. But how does it look like on the 4-hour? It's starting to look like a downtrend too, to be honest. Your odd was in a massive uptrend and it lasted so long, but this is starting to look like a pretty deep retracement, in fact. Daily chart, we can see that this is an important element, in fact. Look at the euro odd here. Look at how that uptrend lasted from spring last year, right? The price remained above the green band and most of the time above the black band, right? The last time it broke below the black band was here, and we got a big move down to the green band. Now we're again below the black band, so could we move down to the green band again? It's possible, right? Definitely is. So from this daily perspective, there is that potential to make that retracement down again. So if we look at the 4-hour chart, what kind of trend lines might be in play here? Well, there's still this trend line. If we connect this, right, we need to break through that really to get that bigger downside. We have this trend line, of course, we had on our chart, right, connecting the tops. So we need to break at one of those. Let's take a look at the hourly. So you can see any upside is really not too interesting because that upside could bump into this resistance pretty quickly. A breakdown, though, would be interesting. But we had divergence between these bottoms on the 50-minute world, and there's a good chance to go back to the green band, as you can see. Price is doing that as we speak. So we are getting a reversal setup here, back to the green band on the 15. On the hourly, that could mean a move back up to the black band. Let's put a fib on this very first correction. Let's see how far the correction could go. Okay? If we put a fib from the very bottom of the correction to the top of the correction, we got a 50% bounce. This is a counter trend fib. That particular fib, the target could be the 152.54 or even the 152.90 or maybe even this trend line. All of those spots are levels that could be resistance spots for more downside. Once we break above, let's say, this black band, there is the potential to go hit the green band. All right? But that is a counter trend trade. Once we get this up move, though, this counter trend trade, then resistance will kick in most likely, and probably will make this break to the downside, although that still remains to be seen. But looking at this big impulses down, it does seem likely. So something like this, up, down, and then again down, seem the most likely, in my opinion. That's about it. I'm just checking all the time frames to see if I missed something. But basically, I think that's what it really boils down to. Don't have anything to add. We can have a trend line here. Basically, a break of that trend line could see the upside retracement continue, but that's a bit of a counter trend trade there. Apparently, the euro dollar. Also, be careful of that. I wouldn't do that because look out for the euro dollar. It too is close to this top of this triangle. That could easily be a resistance spot. Alrighty. So with that said, tell me what your preference is for a particular currency or what you would like to go through. I don't have any particular preference at the moment. Let me check my my list. Let's see. For me, that euro yen looks pretty interesting. I think the Aussie is on my, yeah, the Aussie, the Kiwi, yeah, that's true. I forgot about that one. Kiwi was on my list to review. Let me take a look at the list again. Alrighty. Let's see. Yeah, the euro dollar is on the list. Euro yen is on the list. No, it wasn't the Kiwi. We can take a look at the Kiwi, but actually the dollar Swissy is on the list, so let's take a look at that. But it's pretty similar to the euro dollar. It's just the opposite. The CAD Swissy I want to take a look at, and the euro CAD. Okay, so this Kiwi. Well, the Kiwi is not on the list, and it's not too interesting at the moment. It had a big spike up following the Aussie yesterday, and here too. If anything, this is on a 1 hour perspective making a big impulse up, so some continuation higher might be likely. All right, but at the moment though, as you can see, there's a big move up and making a retracement. So either this is going to bounce up, that could be semi-interesting, but I don't like this Kiwi because of the fact that it's in a 4 hour chop, right? So not too interesting from my perspective. The dollar Swissy is a bit different. Let's take a look at that. The dollar Swissy could have the potential to break above this trend line right here, right? It in a way is in a bit of a triangle 2. So the break to the upside, just like the euro dollar break to the downside, could be a good trade here. One way of looking at this is putting a fib from top to bottom or bottom to top. Target 91.23. Break of that upper black line, or let me make it a bit different color. This magenta line, basically, that I'm going to make now, is the trigger or entry for upside up to 91.20. So that looks like a pretty interesting setup on the dollar Swissy. A break of this black line to the downside might not be too bad either, but as I said, just like the euro dollar, the break to the upside could bump into resistance. The break to the downside here could bump into support. Right? So that's the danger of trading this counter trend trade to the downside. You can hit support and move up. The break of the magenta seems better to me, and there seems to be more space up to the minus 272 target using that magenta trend line. Alrighty, next one. EuroCAD. EuroCAD. Let's take a look at this. Looking for downside potentially upon the break of this consolidation, right? This is a 1 hour chart. We got a clear consolidation here. Looking for a break and continuation of that consolidation, just like the euro dollar, to the downside. Very similar to the euro dollar. That's because the dollar CAD isn't doing too much. And looking for a break of the downside here. If you want to know what the target is, just put a fib on the very last swing high, swing low. Look for the minus 272, which is at 148.24. Dollar CAD. Dollar CAD is just bouncing about, no real direction at the moment. It was an uptrend, now it's just consolidating. So really no trade there at the moment from my perspective. CAD Swissy is something that I noticed. As well. Let's take a look. CAD Swissy here, looking for a potential break of this trend line. It's a pretty massive trend line, or even this trend line, right? It's in a way it's tucked into this triangle formation. So that's always interesting if you get these chart patterns and you can use these trend lines, and a break of either could be a decent trade setup. And a break to the downside actually is a bit of a reversal trade, because you can see that the price is still above the moving averages, right? And when price is above the moving averages on that particular time frame, which is the 30-minute, we are in uptrend. How about the hourly? Price is above the moving averages as well. So here too, in an uptrend. Therefore, the break to the downside is still counter-trended. The break to the upside would be with the trend on these particular time frames. The 4 hour, however, you can see it's not as clear. Price was in a downtrend, in fact, is now making a potential bigger retracement. So the break to the upside, in fact, although it's with the trend on lower time frames, is actually a continuation of a retracement or reversal on the 4 hour. And the break to the downside, although counter trend on the lower time frames, would actually have the potential to be a with the trend on the 4 hour chart. And this is how you can see how the trend depends on your time frame. Right? The day chart looks or is in a downtrend. Price is clearly below the moving averages. There's no doubt about that. Alrighty. How about that weekly, maybe just the very last, also downtrend. So you can see that certain monthly also downtrend. So the higher time frames, monthly, weekly, daily, are definitely downtrend. 4 hour is retracement mode, and 1 hour is an uptrend. So you can see why both trend lines have their potential. Good. That's the CAD Swissy. So what else is left? We can take a look at the pound odd. I think the pound odd will be very similar as the euro odd though, right? So, but we can take a look and see if there's any difference potentially. I doubt it. Look at the daily. Also, this is retracing. Also, this broke the black band and has the potential to move down to the green band. In that regard, it's just very similar. 4 hour chart, downtrend, hourly, looking like price is actually respecting this black band and moving down as we speak. Euro odd 2, right? Hasn't broken this top yet. What's happening with the pound dollar in the meantime? Pound dollar is just going sideways for the last hour. That's probably because of the news. So let's take a look at the euro pound as well to get an idea what the euro is doing versus the pound and their relationship. There's a lot of wackiness. There used to be a downtrend. I wonder now what it is because it's just a lot of choppiness. It's a lot of chop, no real direction as of late. And yeah, it's just, we could even put a trend line, not this horizontal line, a trend line here, connecting the tops like this. Maybe we're breaking out of it, but we broke out with a wick. That's not too inspiring. That doesn't look like a good break here, in fact. But it is a potential hook back to break again, right? In that case, there could be some bullish breakout. Personally, I would not be trading the euro pound, but I do keep an eye on it just to see what the euro is doing versus the pound. And sometimes it's useful to gain an understanding, what pair would be better to trade. If the euro is stronger than the pound, it could be better to long the euro than the pound. If the euro pound is moving down, it could be better to short the euro and long the pound, for instance, right? Against another cross. This euro pound itself seems to be quite messy. This hourly is maybe even an uptrend, but all in all, it's very, very messy. Alrighty, what else? Pound odd we looked at. Similar. Pound yen is probably similar, but just in case, we can take a look. Yes, pound yen is almost like, I mean, there are certainly differences. There have to be differences between the pound yen and euro yen just because the euro pound is moving. But visually, they're difficult to identify. Those differences are small. Of course, there is a difference at particular spots. But overall, the general characteristics of the two pairs, pound yen, euro yen, and euro odd, pound odd, are very similar. So let's move on to something else. How about gold? What happened to gold yesterday? Still bouncing between these orange lines, still waiting for a break of these orange lines to one side or another. How about the dollar index? Dollar index moved up recently, as we should have expected when we broke. Got a lot of trend lines here, but when we broke, basically started to accelerate here out of this zone. All right. Let's see. We're now pretty close to a resistance, though, on this dollar index. From this daily perspective, we can see that there's a clear resistance here, clear support here, and we're stuck in that wedge. A break above that wedge, we could see a breakout trade up to the next resistance line. A break below would mean we have a potential to move like this and then maybe like this. What does that mean in the weekly perspective? From the weekly perspective, basically this zone here is part of the correction of a bigger correction, in fact, which is part of a bigger correction. So, there are a lot of corrections going on. It's a correction of the correction of the correction. If you look at it from this perspective, we got magenta lines here, we got purple lines here, and then we have, again, a smaller consolidation. For the dollar index, if the dollar were really to trend this year, we need a break at minimum above this red to see some upside and strength, or otherwise below these purples to see some weakness. So dollar definitely not in a trending mode at the moment, but who knows what can happen in the rest of 2014, of course. How about the New Zealand versus pound and euro? It's very choppy in general. If you look at this weekly chart, just look at this very choppy move. Very choppy on the pound New Zealand. Euro New Zealand isn't anything different. Look at all this choppiness here, right? There are some trends here, but it's overall look very, very choppy. So really not too interested in the Kiwi. Your dollar reaching the top of the triangle. It'll be interesting to see if we do respect that top of the triangle again, or we're at a bounce or break spot, or will we break up to the 38.2. Let's see, this is the New Zealand. New Zealand, by the way, looks like an interesting wick here. Interesting doji or pin bar maybe even in that regard. That looks like a potential reversal sign for the New Zealand. Let's face it, we had a good run up. We had that run up within this downtrend. So we could see at least some downside based off that fib. Based off this doji, sorry. But if we put a fib on this downside, we could retrace part of that pin bar, maybe up to the 50 or 618, and maybe we see the Aussie again weaken, for instance. But I would be cautious with that downside because it just could be part of the bigger correction up, right? This downside could just be part of the correction and move up again. So if you want to be conservative, I would put a fib on this upside and say, okay, the 50 fib here, or the minus 272 at 101, 108 or 107.50, that could be the better target there. Well, folks, I think that, I really went through the ones I normally look at. So if you have a certain cross that I didn't mention, it would be better to say it now. Otherwise, we'll wrap it up. For instance, if you look at, I don't know, New Zealand Swiss franc, and you're curious what I think, let me know. But those are not, currency pairs I usually look at. I normally look at, as you know, the majors plus the kind of what I consider the major crosses. So we've done that today. I don't want to hold you up any longer than that makes sense. So if you have any questions regarding trend lines or moving averages or fibs, let me know. You can see that in some cases we use trend lines today, in some cases not. It really depends if a trend line, it makes sense to draw or not. If it doesn't make sense, I don't necessarily must use it. That's the advantage of having moving averages because they always have a certain value. If we wanted to put a trend channel here, something like this could have been possible, but we broke out of that already, in fact. Oh, like that. That was a pretty neat channel on the odd New Zealand. So, but sometimes there's just not a good trend line to draw. Maybe on this hourly we could have drawn this. That was a pretty good channel a few hours ago. We broke out of that already though, right? So sometimes, you just don't have any trend lines to draw, and then it doesn't make sense to be forced to look for something. The best is always to keep an eye on it, but if you don't see it within a minute or less, then it doesn't make sense to draw it. It should be pretty fast, in fact. Right? It's not an exercise that should take more than maybe a half a minute, in fact. Well, folks, tomorrow we'll be back with another webinar. We'll be back with oscillator trading, so I hope you join me then. We'll focus more on the AO. We'll put on the ADX as well, and we'll take a look at those oscillators in more detail. We always use it a bit, of course, within our webinar, but now there will be more focus on it, just like sometimes we focus on trend lines or moving averages or fibs. So that's tomorrow, Thursday, the 6th of February, and tonight there's a webinar with Tarantula. I think he's looking at VSA, if I remember correctly. Let me just quickly take a peek. What that is, he is taking a look at Introduction to VSA Part 2. Excuse me, indeed. And then tomorrow, oscillator trading, and in the evening, Murray math. So big stuff coming up. Then, of course, next week we'll be back with the weekly FX recap of Tarantula on Monday. So don't see any questions and or currency pairs. So now we'll wrap it up for today. Once again, thanks, and wish you all a great day. Cheers.
The organizer